In my video following the December CPI report, I said the pandemic inflation spike was over, and we may even see inflation in the threes by mid-year. Following up on my first code interpreter video, I wanted to see what the 10-month annualized inflation rate is, knowing that the May and June 2022 monthly inflation rates were very high, giving us very high comparables for the upcoming May and June reports.
With the high price base in the first half of 2022, we should continue to see favorable inflation reports through mid-year, especially with the Fed expected to continue hiking the overnight lending rate. We may even see inflation in the threes by mid-year, blowing away everyone's expectations.
Here's the chart that Code Interpreter came up with showing the past 10 months annualized inflation move forward by 8 months to show the lag inflation versus money supply. In blue, you see the money supply growth rate. In red, you see the annualized inflation rate over the past 10 months. And you can see that it's moved down substantially. It did, the 10-month annualized moved up to 10%, and now it's under 3%. I asked it to show over the last 10 years and zoom in so you can see that over the last 10 months, the annualized inflation rate is about 2.86%, so under 3%, getting close to the Fed's target rate of 2%. And then if you look at that month over month change, you can see May and June 2022 were well above, they were at 1 and 1.3%. So well above what it's been in the last 12 months. So those big monthly comparisons are going to be falling off when we take the annualized in May and June. I asked it to show me what the 12-month annualized inflation rate, getting that to under 4%, what it would need to be month to month in May and June. This is alpha and this code interpreter. So the first time I asked it that, it said I would need minus 43.18%, which is obviously wrong. So I tried to give more information and clarified the prompt, and it showed to bring it to 3.99%, the month over month inflation rate changes would need to average approximately 0.79% in May and June 2023. And if you look at the last 12 months, it hasn't exceeded 0.79% at all, and even in the big January report. So unless there's a big change in inflation in the next couple of months, we should see inflation under 4% after the June report. And you can see, considering where money supply is and how the correlation between the money supply and inflation has been, it's not likely that we're going to see spikes in inflation in the next couple of months to bring CPI above 4% in the June report. So I'm sticking by my prediction of the CPI being lower and even in the threes by June. And I don't think the Fed is going to hike rates anymore. They should be stopping their hiking. Their June meeting is actually after the May report comes out. So they will see a lower annualized CPI for the 11th straight month. And then they should see another one for the 12th straight month in July. So we're going to be looking at a much lower, much better inflation picture. And with this correlation with inflation, we may even see inflation drop below the Fed's target rate in the next year or so. So Code Interpreter blows my mind. It's so easy to do this analysis and makes it super easy and gives you great information. So check it out if you have access to it.
Please like and subscribe for a lot more useful information to come.